All right, well, we have a little bit of an active Monday so far, so this might give us some context. So we can probably come back around to this, see how the day's trading a bit and what that means for tomorrow. But this doesn't look too bad. I like that it's not, I would have really not liked to see it just expand higher, so this is giving us something to work with. So we'll circle back, check the economic calendar, see where we stand for tomorrow, because there'll be a couple things to look at. But we are at a point that the opening days of this week, the last full week of this year, seems like something can be actionable going into tomorrow. That's going to be my assumption for now, but we'll check back on that. Last week shouldn't take all too much because the majority of last week was more so an extension of the week before. Granted, after Monday and Tuesday, this was good price action. Started to range and provide a lack of opportunity off the higher time frames and really not being able to set any framework, especially with this type of price action where we're getting these deep runs back into previous daily lows to the point we're just leaving behind failure swings. And what we did talk about on, this was Monday, where was price trading on Monday? So what we would have wanted to see, what was going to be ideal to actually get a good opportunity, is I was hoping to see Monday in that previous week just confirm a move away from this high here, because we have a divergence and enough of a wick where we could be trading away from the previous Friday's high and just clearing out all these lows that we've left behind. This deep moves back, leaving behind failure swings, knowing that the move back into the range is going to be the one of interest. But right when Monday came around, leaving behind that deep run to the highs, and then any of these moves back higher were not valid or not something I could even really touch on, because it comes back to the idea of why I note relevant swings and the entire purpose of it. This is just an emphasized version because it was extended across multiple days and the weighting becomes a little bit more difficult. But it's the idea that, we're not noting out this low as more important, because then what about this low? And we keep running out lows. What about this one? What about this one? We're not drawing from clear extremes of the market because we have this series of really deep runs creating those failure swings. And we can't point out a specific low in this market that once we engage it, okay, now at that point we should then be trading higher or reacting to a move lower. We're lacking that here, and we have failure swings off the highs as well. So we're restricted in that sense that we're treating this like ranged price action. And like I said, ranges are always, it's the most technically simple condition to trade, but you can turn it into something that is more difficult than any condition if you attempt to trade this internally, because the simple process is we're waiting for the external ranges to be engaged. When we pull from those extremes, that's the idea of the relevant swings. When we find those extremes in the market, waiting for price to engage there, and then what it does, then we can get a good understanding of what should happen after that. And that's where we look for trade opportunities. And that did not occur last week until the first one was potentially going into Thursday, but that was quickly out of question because that was the first time we engaged that high here. Wednesday's daily candle running up into that high, closing off of it a bit. There's potential that we could have been seeing a move down off of that, which the overnight session basically did. So there's you have the potential framework for it because we have the manipulation of the high, but not the daily profile, because that overnight session just immediately expands what you basically would expect an entire day to do. So it delivers a move that is not actionable, which is not relevant to us because it doesn't really matter if we can know where the market was going to go. It needs to be something that we can actually position with, and this is not that. And when it trades higher, same exact thing. There's no specific low here that this manipulated that I'm going to then trade this higher. So Thursday was an invalidated day, unfortunately, just breaking down, making a move here that we would have liked to position on away from this high. But then we cycle over to the next day, because whenever something on that day is not offered. Well, then we roll over to how did that day close and what does that mean for the next day? And we got a very similar thing where we still have that engaged high, which is where our focus is. And we got really deep back into it. And the first instinct, whenever you have that, is what did the other pair do? Because you have a higher high on ES, or you have a lower high on NQ. So this is not a failure swing that you couldn't trade away from. This is actually a divergence in the market. So again, we come back to potentially valid highs that we can trade away from, but you would need some alignment of the daily profile to actually do that. Now, the gap here lower definitely helps this framework, because an ideal closure on this would have been on Thursday, having price form the divergence and then closing weaker off of it. So we'd have this range that we could say we have a protected high. We'd want to see the day form away from that. We're closing a bit deep into the high, but the gap almost makes it in the sense that if you go to a lower time frame, we've broken away from this divergence. We've left that behind off the high of that range, and we have a reversal confirmation on the lower time frame. So this gives us more room to work with. So the gap actually helps. Although this is not a classic example, the gap is supporting this because we have a reversal confirmation. We can actually draw an invalidation point, because here we're not going to use this wick and say, that's our invalidation point. We're going to use that 30-minute, much better range on this. We use these series of up close candles, and we can draw an invalidation point to this here, saying that next day we should see from that daily open, respecting that point, because if we're going to trade away from these highs, it should respect that reversal confirmation. So that's the way I'm approaching the framework here. Now, just like this, we had framework before, but we need daily profile confirmation. And I sent out, if you haven't looked at it already, in the lessons channel, kind of just like a full walkthrough, but I'll do it here just to explain. But the process, so the simplified version of this is we go to daily profile. But I like to expand on what I'm actually looking at and how you arrive at certain steps. And the one thing that I just wanted to go through with this one, and it's an idea that's on almost all trades, but as this day was going into the New York session, although the framework does not support the upside, we can see the daily profile is making this move here, and into the open, you could see potential support for an upside move. So while the upside is not in question, we're not going to be trading that on this day. It's not an option for us if it does play this out. But if the daily profile appears to be developing into something that could move the market higher, you wouldn't be shorting, obviously. And we saw that open come through 9:30, running out that intraday low and then expanding price higher. So to first confirm this, that first step would have been 9:30 comes through and gets that initial closure. And if we saw price expand back higher off of that, that would have been uninteresting for the bearish idea, because that's likely to push the market higher. But we're seeing this development, and we want to be in a position that I want to be completely crossing out the upside, where the upside has zero potential to be playing out. We can fully invalidate that, and then I can then focus on this framework that is supported off the higher time frame. So what does that look like? First, we see the market was failing to get that initial closure. So this is a first sign. But that intraday low is important, because if the market is going to turn higher right at the open, we know that the volatility driver should immediately support that and start turning price higher. If it fails to do so, failure to manipulate hints at a continuation. So that intraday low is important. And once we saw this continue to break down, and at this point here, you are seeing that signature where the upside is fully out of question because you're failing to reverse at that intraday low. The volatility driver is not confirming this move higher, and we have a breakout of this low here. So we've fully crossed off the upside. That's fully invalidated. And that trigger where we can then switch to the downside is actually an entry signature to get on with the downside. And if we were to, while I'm already aware of this in a live market, I know what the framework is, I know what the daily profile is. The idea is that if one side is no longer in play, what we want to be thinking of is, does the daily support it? Yes, because we have manipulation, divergence, respecting the invalidation point, daily profile. Is it going to load? Daily profile, 18 candle high. London session expands away. We're in the New York session. We can trade that as a continuation into failure swing. So top to bottom, it's a very standard setup. So on that 5-minute closure, I can be fully confident that the market is completely one-sided here without much question. And that there becomes the entry to then look for this as an initial target. But we could even see, while I was not fully expecting or needing it to get here, we had these lows that we wanted to see cleared out from even back on that Monday before, which is we draw our eyes left, all irrelevant, failure swings all the way to the extreme. That's the extreme here. So that's a final area in the market that we could note out. And lower time frame, once this made its first push, it was scaling out 2R. That's always what I want to get, especially as we get into a target like this. Failure swings here. Scaling out into 2R, into weakness, because again, I don't want to be up 2R or beyond that, have my stop trail to something like here, and then I'm going unrealized back to almost break even. That's not any value for me. There's no reason for me to do that. So once I'm at 2R through a target, scale out into the weakness, and that allows me to have more room on this. So as this plays out, I have one runner left on that final push again, scaling out into the weakness, closing that position out fully. And it does eventually make it to that low. Oh, that's not entirely important to me. Didn't have to do that for this trade to work out. It could have stopped here, honestly. It would have been fine, but that's that extra push that we saw on that day. So that's the logic on the trade. And I just wanted to, in that lesson, more walk through the actual thought process, but then just keeping you grounded in top to bottom, daily framework, daily profile, entry after open. It's quite straightforward. So that was the only trade that in this entire time that offered that framework off the extremes of this range. And super boring for me to not give you anything. This is just one of those times that throughout this entire thing, there's nothing to work with. And it's just more of a, ranges can last a day, 2 days, but sometimes they can extend for a week, 2 weeks, and you got to have to sustain that so that by the time the opportunity does come, you're not fighting out of a drawdown. Now ADR, I mean, it's tough with the ranges because you're going to have this bit of range price action because the market has been consolidating, and that's going to skew the ADR a bit. But I'm also just thinking of, we're trying to trade the expansion, so it's going to be above that, but also we're just going relative to targets on this. So just through this low, which is kind of the only target in the market, is reaching that 2R. And like I said, it did not have to expand this entire way for me to take out on that trade. This was really where I'm looking for price to go. But ADR, it's definitely going to get skewed because the market went from trending to consolidating. And if you're gathering ADR from these days, when you're trying to trade the expansion days, it's going to skew your perspective a bit. Did I short today? No, I did not short today. But I know some people did. And I'll take a look at it. seem to be decent. But that is, as far as I can remember, everything from last week. Bearish, yeah. So the framework is, let's keep that there. Again, we're just, because when the market is keeping these lows that are acting as failure swings, right? If you're bullish on this day, didn't really run out any relevant swing. And we're focused on the extremes and the reaction here. Manipulation Wednesday, divergence formed on Thursday. The gap definitely helps, but if we were to look lower time frame here and just imagine if the gap basically acts like the market broke down here. We have a reversal confirmation, and that's your framework with failure swings left at the lows as objectives. Bullish bias, like definitely cannot pull it here. Not sure if like maybe we're still lows here. Trying to find, like, even if you had bullish bias, I mean, you can't really pull it from ES. Maybe the breakout. That's where we get our confirmation, and we don't have any signature here to act on. So I'm not, maybe it was just today you missed the short side, which fair. Acting on the upside would definitely not be there on this day. Sorry, we're looking at this, and it's even more emphasized on ES. We have these lows, all failure swings, expanding here right off of nothing, and then we draw back into these lows. That's that extreme point. Like I said, I mean, I don't think it would be right to go into that day bullish because of those lows, unless you had a divergence in some sense. But even if you did, we'd go into daily profiling and you wouldn't have any continuation to get in on. Last week had FOMC press conference. I don't think that didn't really do too much for Wednesday. It didn't set too much context. Yeah. This week has, so tomorrow, from what I've seen, is technically NFP. Now, I'm not 100% sure what that reaction will look like, so I do feel it would be best to assume high impact news at 8:30 tomorrow and allow that to come through first. Play it on the safe side, and then whatever happens after. If it is a more significant reaction, then on these high impact news days, it is more emphasized on that, how it hits the market to set the confirmation, sometimes even the narrative for the day. So a lot of focus on that time. 9:45 here is usually does not matter, but I would treat that as NFP at 8:30 tomorrow. And then I know CPI similar is probably best to play it safe. The month over month is usually more volatile as an event. See, this is year over year. Month over month is usually a bit more, but I would play this on the conservative side and call it high impact news Tuesday and Thursday at 8:30. I don't like to play with those too much. The low impact ones, I know there's some variables in how they hit the market, but they're a lot less significant in these cases. So I would call it that, but doesn't mean you can't trade on those days. Doesn't mean you can't trade the days before, in between, after, whatever it may be. I would just be intraday saying I'm not going to position through these events or try to scalp before it or whatever it may be. That would be my perspective. Now today, I guess some people shorted this, which I'm okay with most likely. Off the lows. Yeah, you got nothing pre-open. 9:30 drops it. Not really a great signature around here. This is probably like a really low time frame opposing candle. Probably like 2 minutes. 3 minutes. Yeah. It's a quick expansion. I don't usually find myself here, but yeah, I mean that would be fair to take, because you go pre-market session, you have the lows still open on ES. Previous week framework is fair off the highs. I like that you're running out that hourly swing. Support from 9:30, reversal to continuation. I have no issue with that. I don't know, did anyone trade this today? M2, yeah. Yeah, I mean it's kind of one of these that you can see it there. Somewhere in here, I assume. It's the only really good, like, signature-wise, this gets a bit late, so I wouldn't like it for that sense. You don't want to be positioned up here right after the reversal, but this is the type of signature that I would look for, just in terms of how defined it is. But yeah, lower time frame kind of forces you there. That's borderline. But yeah, solid logic. And honestly, this is the type of day that you really can't get caught on any other side of the market. That just wouldn't make sense to long anywhere. So honestly, nice and clean. But I think this, depending on, let's see, where are we at here? So ES still has this open. NQ's through both. There's a lot of ways that this could go. For example, I'm not opposed to either side of the market, because I could see, like, if the market were to close here, you could frame either side of the market because you're sitting right at this relevant swing on ES, especially, that engaging this would give you a clear direction. For example, if this next day developed a bullish daily profile off of this, well then that's a very fair long. And in the same sense, if this closes weak through that low, I would also be 100% willing to trade the continuation away from this high because it is valid in this market. So if it doesn't get a really weak close where I would be more one-sided to be seeking continuation, for example, really just closing, whether it's ES through this low, closing weak, or NQ not leaving behind, manipulations on that previous day low, and it again also closes weak, I would be favoring continuation away from that high. But if we close up off of that, then I would also be, I would be open to the upside because it leaves valid framework on potentially either one. So we still have a couple hours left in the day to see where that goes. And if it does end up being one-sided, then I would just throw up a post about it, because that would make it very simple to share. When you go into the day with an idea and it fails, how do you reset? Do you go back to the daily? Just interested in your thought process. Yeah, so if I'm going, it depends on the day itself. If I'm on a day, let's say that's only interesting to one side, and that one side gets invalidated, meaning that can no longer play out in what I need to demand, then the day is over. I don't need to address anything else because only one side of the market had potential. If it's a day that, you can do this for any of your process, you don't have to overthink it. Once your side of interest is completely invalid, once you have that moment, go back to step number one. So go back to the daily. On the other side of the market, the one that wasn't invalidated, can you frame the daily in a way that is favorable? Does it have a supporting daily profile? Do you see an entry signature that's quality? And if you can align the market with the model top to bottom on the other side, then there wouldn't be anything wrong. The issue is one side being invalidated and then you're chasing, some signature on the 3-minute. That has no relevance. That's the issue. If you're resetting to step one, well then sure, you could flip your bias because it's rooted in logic, not chasing or fear of missing out. So it's two different things. So when people, trading the invalidation is not a complicated concept. It's just resetting your perspective and seeing if something on the other side of the market aligns top to bottom. Yeah, if NQ really closed strong, that would also be valid. If this closed strong up here, completely fair to trade that higher because you've run out that low, and ES would just become a divergence. If it was barely here, I wouldn't be fully one-sided on that. Yeah, if you took a short today, I would say that's valid. It's completely one-sided. There would be nothing to enter long on. Has good support from the daily profile and the 930 open. Very directional. Reversal. Depends where you took your signature. But the idea is very much there. With Monday, that's something that I do. But there's nothing inherently wrong with trading Monday. That's why I don't know where in that lesson it is, but it's somewhere in the bottom that says you can trade Monday. It's not incorrect as long as you're following the model. It's a thing that I do that helps me set my framework into the following days. When I see Monday do something, that's my confirmation for Tuesday. But if you get something like this where it's very clear, I think even Kiko took a trade today. There's nothing, I'm not going to say it's wrong. Fair value gap. I don't use gaps, but maybe Yeah, I don't know. I keep it to highs and lows, but there could be, if you use gaps, maybe there's something in there that gives you some confluence. But what is you T? What do you want? You're gonna be where, like physically here or in the stage? Oh, okay. Yeah, I got another. Hopefully not too soon. 20, 30 minutes. When is my stream? Like the one I'm doing right now? Cause I'm always I do this one at Monday at 12 every week. T's showing up. I'm not even sure. Yeah, your dream of the birthday party. It's coming to life. Yeah, and Mo, back to your question, saying you want to avoid FOMO or forcing an idea. That is the thing, is you want to stay rooted in the model, resetting completely, because like you said, you can always find some reason on these lower time frames to justify just taking the trade, because what if it does this, what if it does that? It's moving so quick. It's all these little things. That's why it's good to go back to step one whenever that happens. And whether that means the day is truly over or there is another valid trade, then fair. Yeah. How do you manage waiting periods? You know, big savings to lean on. I mean, the thing that I believe in, I mean, you kind of have to ask yourself. It depends what type of trader you are, and if you're going to ask me, how can I wait through this? Like, how can I take a trade? I mean, how many days was it? Whatever, Tuesday to this Friday. How can I avoid or just not do anything in this? And the reason is that I know if I'm trying to participate in this, then I just lose money. Like, I am very aware of what I know in the market, and this here is not involved in that. So how can I wait? Well, I'm technically making money if I wait, because losing money doesn't get me closer to, you know, keeping what I have and when I make it. So that's part of it, because I know the conditions that I'll just lose money if I try to participate, trying to get more out of it. Because I know there's certain periods like this that it just happens and you have to deal with it. And the market always comes out of it as well. But it's also in the sense that when I trade less, you allocate risk very similarly to someone who trades 3 times a day versus someone who trades 3 times a week. Someone that scalps all the time is not putting on the risk per trade as someone who's trading much lower frequency. Everyone has a tolerance that they usually get adjusted to anyways, just depends on the frequency. So there's abnormal periods like this that you just have to wait, because I can't just magically pull money from the market. It has to be rooted in some logic. And if I try to do anything here, I know I will lose money. If someone forced me to put on a trade every single day here, I'm coming out losing money. And that's just how it is. And I'm fully aware of that, because it's just not my move, and it's not something I attempt to even understand because it's not what I'm looking for. So it's a mix of both. It's just kind of, you kind of just have to be aware that it happens sometimes, and the market sometimes is very opportunity heavy, and certain times of the year are like that, and it almost comes in waves, I feel. But it's more what you do in these times, if you can keep what you made when it is going well. You think your idea of just framing, do you think the idea of just framing your idea in the journal the day before, sticking to that instead of flipping your bias, is a good way to prevent overtrading? I mean, yes, it's going to get you, I wouldn't, man, maybe a little bit less trades, because there will be days that you don't even go into the day with a bias. I always think you need to go into the day with a plan, meaning, for example, if we closed here, I wouldn't go into the next day being heavily bearish or heavily bullish. I would be open to both sides, but I would have a plan and being aware of where does the opportunity exist and what has to happen for me to act on it. So you can't always go into every single day with a defined bias. When you do, that's ideal, and that's usually where the best trades come from. But you're going to have situations like this that you almost have to have a plan. If something can develop into an opportunity, where here I could see both sides having potential at the moment. This may change, but I do think that helps. But I think a good way to prevent over trading is, having a cap on how many trades you take in a day. So I've never taken more than 2 losses in a day. Cannot remember the last time that's ever happened, because I don't allow myself to go beyond that. It's an extremely strict rule, no matter what I think about the market. Having some cap on the downside is important. So I would definitely be thinking about that. And also knowing, maybe even give yourself a maximum amount of trades in a day. Let's say maybe I don't even want to trade more than 2 trades in one day, regardless of the outcome. You also should be aware that you don't have to use both trades, but you give yourself, you allow yourself to do that. Because it's a balance. You don't want to close yourself off to a valid opportunity, but you also want to close off the downside that could be potential. So it's a little bit of both. I think max trades or max loss on the day is a good way to do that. One trade, win or lose. In a day, I don't hate that. That's usually, more or less, that's usually how my days go. I don't, is my voice not coming through? Or is that just one person? It's good? Okay. I'll just make sure to get him sure he knows that. Sorry, where was I? One trade per day, win or lose. Yeah, I don't think that's bad. I think that gets you just about all the way there. And don't have an issue with that. Do you ever feel like your edge is slipping or changing? What if you feel the need to tweak your strategy and system, fear of it not working anymore? I don't feel that too often, only because I would maybe feel it more if I was very heavily active in the market, maybe every day. The only reason I don't feel that as much is because I really do a lot of work in preserving my edge and not trading in a condition that I know is not favorable. This is kind of the same example of I'm preserving my edge, because if I were to trade the same logic, attempting to trade it every day in here, I would feel like I lost my edge in the market because it really is non-existent in here. So the waiting part of it is what helps that for me. So I don't feel the need for that. And I'm also very hesitant for tweaking my strategy because, one, I don't feel a reason to do it, but also a big part of my edge is really deep experience in the same concepts. And if I keep adding and tweaking, you lose experience in it. And I don't really feel there's anything technical that I need to add. To me, it's more of just executing what I already know better and better. So I feel the waiting aspect is the main way that I preserve my edge. You can definitely feel it slipping if you're trading, if you get caught in a condition that is poor. And that can happen there's certain periods that the market can technically offer your setup, but it's not delivering. Doesn't mean you lost your edge. That can happen. But I'm very hesitant to change too much because I kind of lose what works for me. Yeah, I mean, that part of my system, the purpose of using relevant swings, is more so for the fact that we're trying to do everything possible to make an assumption that what the market is doing or reacting actually holds weight. I'm trying to remove that part of the doubt from the technicals. So when we see ES, NQ, all of these here, go on these lower time frames, right? Does that matter? But we didn't engage any low that would hint that we need to continue from here. What about when we run out this low and we get that close? Does this low hold more weight than this one? Does this one hold more weight than that one? It's this idea that the reaction has to take point at a place in the market that I don't have doubt that it matters or not. That's why we pull from the extremes. That's why what the market does here, I clearly know that's going to hold weight. What it does matters because there's nothing else beyond that I have to think about. This is the extreme. So what happens there is going to matter, in the same sense that now that we're at this low here, clearly defined, if we see a clear reaction at it, well, then that's going to be my best assumption that it's going to hold weight and is going to matter. And through that process, this is kind of a concept you could bring into other time frames, but on the daily, it takes some waiting at times. This is a over-exaggerated example, but those extremes are where we really see that move occur. Everything within it was lacking the fall through. Sometimes it can expand off of nothing, and that's just not a trade you're going to take. Thoughts on following: regardless, take profit and risk, assuming the level of risk remains consistent. First contract off at 1-to-1, move stop to break even on second contract, target 1-to-2 minimum, trail of NQ, comes back to break even, still walked away profitable. Yeah, I mean, if it comes back break even, you're going to walk away 0.5 R because you've only realized 50% of your position at 1 R. So it depends like what your goal is. The only reason I struggle with that is if you're waiting, if you're being patient to frame like a higher time frame opportunity, taking 0.5 R, it's because it's, I don't know. I would struggle with that a bit. I would maybe increase the minimum to maybe 1.5. That's kind of where that's where I try to get as close to 2R before I really start thinking about managing the trade. 1.5R can work. Like, we don't need home runs, but if it's really minimal, then it's not really helpful either. I do almost a version of that, but it's not really the same. I'm definitely trying to reach for closer to 2R. And then when it does reach there, scaling more aggressively than not, because that's my main objective. And then once I'm realized there, on the majority of that trade, worst case is usually I'm pulling a 1.5R, maybe even less on the runners. But then I'm looking for that final push to get a little bit more. And how can I manage that to get there? Maybe if you were trading every day, if you had a higher frequency, that might be okay. I would rather you go fixed risk to reward if you're still learning, if you're very early. I'd prefer you just go fixed at 1.5R, just close out fully, because then you'd get there a lot more straightforward. Because again, if you reach 1.1R, you scale 50%, it goes back to break even, you got a 0.5R. If you make it to a 2R, you only actually realize 1.5R. So if you want to just cut through all that and just say 1.5R fixed, if you want to keep it as simple as possible, it's kind of the lowest risk to reward that I would be looking at. Yeah. Wonder if we'll get this. Like, that would be a directional close for sure. If this came through like that, we close framework for the next day. Not quite there, but wouldn't be too bad. Adjustment of props, it's good. I'm still doing back and forth a bit. I think in the new year, I'm going to get set up, because I recently found out that you can copy a personal to props, but it's a little bit more difficult because I don't really want to drop one fully. But when I was doing them solely, I do notice that I not fully take trades that I wouldn't take on my personal, but it does change the mindset slightly. That's the one thing I noticed. But I prefer to do it all tied into one, so I don't try to have that mental difference, if that makes sense. But I have to ask, because someone had pointed out that it's possible, but it's slightly complicated, because it's like you have to get a dollar. Because I go dollar risk personal, prop has to go percent, but then you have different sizes on the accounts and they're mixing up. So I have to find the right way to set that up. But yeah, like you said, personally, you feel more picky, aggressive on props. So yeah, it's kind of, it's a weird mix up. And you can trade them separately, but then it becomes this like extra thing that you have to think about. Is this setup good enough for me to take personal? Is it still valid enough for me to take, like, it introduces more things that you just don't really want to be thinking of. It's easier to just be like, oh, this is a valid setup, it's quality, let me take this because I believe in it on any type of account. The way you journal your trades in the trades journal. Oh, you like the way? Do you have a Figma template that you can share? How do I do? Oh, so the trade section. I mean, those are more screenshots. Like, I'm trying to see. Usually I just do a square screenshot. That there. So those are just straight from TradingView. All of these, if you have a Mac, you can screenshot where it's like a fixed window, so it's always a perfect square. If you're on Windows, you can do the shortcut, and then you kind of have to like you kind of drag you would drag it like this, and then it's annoying because you have to do it multiple times. So you'd be like, okay, I want to send it to that, let me do this or whatever. But it's nothing more than just a TradingView screenshot. Risk on prop, again, depends. I try to avoid most consistency, so the eval I want to get done in 1 to 2 trades. And then you have to go percent based, because while I still like to think in dollar amounts, meaning when you have the max drawdown, how many losses can I take if I'm risking X dollar amount, where I feel comfortable going from there. But you have to think percent wise if you're going across multiple different sizes, because the dollar amount is going to change. So in an amount of trades, I like to have a 3 to 4 trade buffer from the max drawdown. That's where I'd feel pretty good. Again, that's a lower frequency sense, because I can reset, readjust. If you're trading a lot more, then you'd probably want more trades acting as a buffer before you would lose the account. Do I have a Figma template for the trades? Can you give me a screenshot of which one you're talking about? Because maybe I'm thinking of something different. But if it's just like the square screenshots, like even the ones I do on my Instagram is all in TradingView. It's like what I do is, if you really want to focus on a certain piece of price action, like I would center this, I would go like this, that, and like this, and now it's suddenly floating, and then you would, it's better on the Mac, but there you have it. Now it's so you could plug it into it, but was that too quick? You just screenshot a blank portion of your chart, so you have like this like filler, and you can just block out anything to the left if you really want to section it off, and then center it, and then you would just screenshot your Pike breakfast before or after my house. I mean, I'll wake up and the first thing I do, if I think there's an opportunity on the day, is look at TradingView. So I'm obviously not eating breakfast right when I wake up. It's usually, I don't have a sequence for it, so I don't even know. It's definitely one of the first things I do, but it's not like a thing that impacts me, if that makes sense. I'm not planning my breakfast for a certain time, or it needs to be before or after anything. I wish I had my days dialed that much, but they're not. Routine outside of trading. How do you see your routine outside of trading is affected, that it affects into your trading? I mean, it depends. I like to do similar things every day, and I'm not a very spontaneous person because I don't like to be unplanned. So, for example, whenever I travel, I am not good at trading. I am out of the loop. I'm not keeping track of things. I feel out of like the flow of knowing what's going on and just distracted overall. So that's on the opposite side of things. Traveling is highly distracting, not routine based. Maybe I'm in a different time zone, and that is not a good place for me to be trading or even putting on risk, making good decisions. When you're in there's two parts of that. When you're in a routine, everything is just it's just standard. You're in the flow of, this is what I do at this time, and there's no outside effects that would be affecting you. You can kind of just do what you know you need to do for the day. And I like that feeling. I like knowing what I'm doing. I like being at my desk. I like having my setup. But then the other side of that, like, how do you feel your routine outside of trading affects your trading? I think that, trading is almost like one of these things that it does reflect yourself as a person without sounding all philosophical, because it's just the reality. It's the way you act is going to be shown in your trading. If you're like me and you like to be moving slow, you like to think about decisions, you like to be planned, then you're going to do better in a type of system like this that completely reflects that. I don't like to jump on an opportunity that I didn't have planned. So waiting comes natural. This is just like how I am. So I think how you move in your routine, if you're disciplined in something, if you act this way out of trading, it's probably going to show in your trading. So I think that matters as well to a certain degree. And I've always mentioned before, like, you can align your system with how you are just naturally as a person, or you're going to face a little bit of friction. So maybe you have to change how you are as a person slightly to make sure it aligns with your trading, because it does make a difference. Because how did I find this way of trading? It's just because that's how I am. It's just naturally, for whatever reason, it matches up with how I've always been. Vacations are far and few for you. Yeah, I traveled a bit more last year, but pure enjoyment vacations, yeah, I've only done what I do. One last year. I don't crave vacations too much. Every once in a while, but it's not my I don't feel at peace on a vacation, which might sound crazy, but I'm just much better in a routine. Have you ever had a plateau period in your trading that required a breakthrough? For sure. The first couple of years of my trading were really, well, that was less of a plateau and more of a big up and down swing. But I've 100% had periods of either underperformance or kind of like you mentioned, which is why I think I lean more into waiting and being more particular, is that feeling of maybe I'm not as consistent in this as I was before. And you start to think, that is kind of the part of where you think, for the past month, maybe 2 months, I haven't felt as in tune with the market. Maybe I've plateaued in my understanding. Something's wrong that I'm doing, but it could just be the market hasn't been offering what you look for. And at first it kind of feels like maybe I need to be changing things, but that's where now I feel it's far more about just you adjusting to the market, where certain periods you kind of have to step back. And then that also slightly leaked into my system in a way where I would have periods where I didn't feel that confident. And part of my system that where's that Kiko sent it the other day. I have that image of, maybe I'll find it if I scroll back slightly. Here it is. This is like so important to my trading because that image here, I'll put it on screen too. This is kind of the one thing that can keep you grounded through any condition, because you have the same logic that you look for in the market. But that's why I don't worry about what event happened here. Is it December? Is it August? Is the price action good at the beginning of the year? Is it like all these external factors that may or may not change how the market trades? I don't think it's that important, but if your system adjusts when you identify a condition that is slow, or maybe isn't offering something that is ideal for what you trade personally, these are the things that you can shift in your trading. So I always talk about how if the framework is poor, this can go day by day as well. If the framework is poor, if the condition of the market is poor, well, then I'm highly conservative on confirmations and entries. Like, I need to be unbelievably convinced before I take this trade that it is one-sided for me to be even interested in this. Before, when I felt those plateau periods, the market would be not in favorable condition, but I would enter and participate in the same equal way as a favorable condition, which doesn't work out. I'm telling you, that doesn't work. You have to have these slight adjustments to the same logic. So my system doesn't change, but there's these variables that you weigh on this scale of, okay, this is really high quality. I can jump in this, the first 5-minute signature that pops up, I'm in on that market because this side is highly favorable. So I can be aggressive. But when the market's slow, I feel things are cooling off. I need to be so high on confirmations and entries. They need to be so clear. The market basically has to scream at me before I take that trade, and I'm comfortable waiting if it's not there. So this is kind of the scale that I operate on when it comes to this side of things. And I don't know if that's talked about enough, but that is extremely important, because it's not really a concept. It's like an understanding. I've always, there's just these logics in trading. If it wasn't perfect in the framework, then why are you being aggressive on entries? Like, what's the reasoning behind that? If it's unclear, you need to either be out of the market, or the market needs to demand that you get in before you even think about entering. So it's just like an idea that you almost always need to be aware of. This shifts day by day, but it also goes by conditions through weeks. So this is always there. This never goes away. And I didn't learn that until, a year to 2 years of trading my system. And I also didn't conceptualize this until, we started teaching things, because it's like a subconscious idea that you apply to the market. But it's shown in a visual. Yeah, we'll upload this for sure. I'm recording, so it looks still good. How and when would you consider a positional entry M30 and above? Yeah, positional entries are few and far between, but they are good when they are there. it's really only going to be when a previous day closes and it's fully one directional going into the open of that next day. And you can basically enter on a higher time frame signature that acts as the invalidation point to that bias. So you're no longer worried about timing because you're positioning on the invalidation. You don't care if it plays out overnight. You don't care if it plays out in the New York session, the London session, because it's not about timing. It's you're positioning on the invalidation. And if you're stopped out, well, then the bias was never in play anyways, because that's the end of it. So there's some examples, but like I said, it's few and far between when it really should be taken. And I mean, what the last one was that I can remember was, this was a close one, but the last one I took, I can't really remember off the top of my head which one, because they're not, last one was really good though, that I think it was on ES. It was this here, I'm pretty sure. Like the breakout signature. Somewhere in there. But I don't have like content on it because I feel that's somewhat distracting to what the main focus should be, because it's like a maybe once a month thing, if it's really like a good trade. It's more of a one-off thing, but it's a thing. It's like a thing in your bag of tricks that you can know. Yeah, opposing candles can be used. They're just not a requirement. So, and it's not too often we have opposing candles that need to be noted on the daily. Because it's really just highs and lows that can kind of be a supporting factor. I'm trying to think, do we have anything recent that I can think of? Like, it's usually not all that common. But yeah, you can use opposing candles on the daily in certain scenarios. This might have been the last time that I can think of. Right, like you're basing a bearish bias off this closure, manipulating that high, but we could mark out an opposing candle and say that should act as resistance and we should respect that opposing candle on the daily. So not a requirement. We don't need closures before we start thinking of the continuation, because it's just how price acts at the highs and lows, but it is there sometimes. The day hasn't closed yet, so NQ, like it's possible it doesn't close up off of that low. So we're still sitting relatively two-sided, but not to the sense that tomorrow isn't going to be actionable. We're kind of just waiting for a little bit more on this day, and we'll talk about it as it keeps going. But It does depend. T, you're here. Okay. I'll take these last questions and then I'll ring you up. Forex and gold, more than not. Work using higher time frame signatures, yes. In many cases, the higher low becomes a relevant level on the next day. It's tricky to judge whether it will react to the level, reversal, or break through it. Higher. Yeah, I mean, you can sometimes, I know if you're talking about like the previous day high and low end up mattering, you almost have to watch if the daily profile is developing off of it or not. And sometimes if it does, that can negate the direction you're looking for. And that's kind of, it's a universal thing, but yeah, maybe you see it more on Forex. But yeah, I mean, if you're trading those markets, higher time frames I like better just because it doesn't have the same volatility drivers as indices. An indicator, higher time frame SMTs on the lower time frame. I don't know if T's indicator does that. You would have the answer, but I don't use indicators, so I'm not the best person to ask. There probably is. I just don't know how accurate it may be. It might note things that aren't actually divergences. I'm not fully sure, but someone else may know that for you. But yeah, I'll gonna close this off here. Solid questions, good stuff, and we'll see how the day closes. If it is directional, then I'm gonna put something out there. We'll see how this goes. 3 more hours left, so we'll get to it. Otherwise, we'll upload this recording as soon as possible. And yeah, enjoy the rest of your Monday. We'll see you guys later.